Hello and welcome to Moving Iron Podcast After the Bell with Chip Nellinger. Chip, looks like there is some pretty good action in the markets today.
There was a strange day. You would expect, and we talked about this late last week with some corn planters rolling in a lot of areas, that corn would be under some pressure here. But boy, there's a lot of money flowing into the grain markets, commodities in general. So good day, up 3.5 to 4 cents in corn. I think 7.5 month highs here. New crop corn closed the day around 4.19. Actually 4.20 and a quarter is where it settled. So that's higher than what our best chance was a year ago on new crop corn a year ago. So a lot of difference 1 year makes. So it's a good problem to have. Yeah. The wheat market, seeing a lot of short covering. The funds are still short wheat, and they're probably in the last stages of getting out of that. It's several day occurrence. It's the start of a new month. They were buying at the end of April. They're buying to start the month of March. I should say May. I'm sorry. So you had Chicago wheat up 18. You had Kansas City wheat up 15, and good strong close. It's usually going to mean that there's some more momentum to the upside. And there's little pockets, we talked about this yesterday, little pockets popping up where the Black Sea area produces a lot of wheat. They're on the dry side. Australia is very dry. They're getting ready to plant. Argentina is getting a ton of rain right now. It's going to prevent maybe some of their wheat planting there. So there's some little issues popping up for wheat production across the world, and you're seeing the funds finally, after 3+ years of being short, getting out of that market. And that's a lot of buying, and so there's probably a little more to come. So it's a good, strong close in wheat, a multi-month high in wheat, 7+ month highs in corn. Beans just kind of hung out. They closed higher on the day, 3 to 4 higher, but all the action seems to be in corn and wheat as far as the grain markets go.
Right. Okay, so we've talked about this in the last 2 or 3 weeks. We've kind of bouncing this back and forth. When you start looking at planting progress reports like the one we talked about yesterday when it came out, there was Illinois, I think you said, had 0% planted right now. That was as a goose egg. How far behind does the planting progress report have to be before the markets start paying attention to that?
Well, I think that was part of today's strength in corn. I think the market's paying attention to it. We're still getting planting progress here in the Eastern Corn Belt. There's guys, large operators in Illinois, they're done planting corn. Some of them were, by the next rain that's supposed to come either tomorrow night or Thursday, they're going to be done with everything. So there's a lot of progress being made here in the Eastern Corn Belt. Northwestern Corn Belt, not so much. The market is paying attention to it now. And there's supposed to be some rain out in that part of the world as well over the next 24 to 48 hours. So, they've been very slow to warm up. That's been half the battle, is getting the soil temperatures warmed up to plant. Now they're about there, and they're going to get rain. So I'm telling you that if we get into the 10th, 12th of May, and we're still seeing, Nebraska, Minnesota, South Dakota, and even Iowa a little bit behind the pace, it's going to start adding some additional risk premium to corn. That being said, it does not take long. We need about a 5-6 day window. We can get a lot of corn in the ground in a hurry. And but I do think it's going to be affecting the market here, especially as you get in the next 2 weeks. We get past the middle of May and we're still behind the pace. The market's going to start assuming that history and textbooks tell you that a late planted crop you're losing yield on. So it is going to be a market mover. I'd say we're right on the fence still. We still have 10 days, 2 weeks, but if mid-May we're still fighting and behind the pace, it will start affecting and adding more risk premium to the corn market.
Okay. Argentina has had a rough time this year. They were dry, had a hard time getting the soybean crop to really take off and go, and now they've gotten so much rain now that they're having a hard time getting what they did get to come up out of the field. So how's the market reacting to that, and is that maybe the slight drivers in the soybean market?
Yeah, Absolutely, it's not going to do them any favors. It's, when it rains, it pours. No pun intended. Drought stricken, and now they still have about 40% of their crop left in the field, and now they're getting torrential flooding rain. So, on mature beans, everybody knows you get 6, 8, 10-inch rains on mature beans that are ready to harvest. You're going to have some field loss on yield. So that's just adding insult to injury at this point. It's going to take some more yield off the top of their crop and delay wheat planting there. So it's multifaceted. As you talk about weather, still Brazil is very, very dry for their second crop corn. So weather is becoming much more of a factor than the last 18 months probably. That's quickly turned around and really is detrimental now to a lot of different spots: Argentina, Brazil, the Black Sea, Australia. So Mother Nature really is going to drive this as far as the production potential of the world.
Right on. Okay, so let's talk about the livestock markets right now. How did cattle and hogs finish up today?
Yeah, cattle had a choppy day, traded both sides. Almost a $2.60 range in cattle. So it was a wide-ranging day. Settled them just a little bit lower, although that market came way off the lows late. So, again, I think there's still this issue where there's a lot of selling pressure in cattle, but yet the box beef and the cash market seem to be holding together. And until that breaks, you're going to find good buying on the break. So I think cattle are going to be pretty volatile. We may have to wait till later in the week until we get a little better sense on where cash cattle are going to trade. But a choppy trade here, to say the least, almost a $3 range, low to high in the cattle. Hogs fared better, up 145 in the June hogs. Strong close. Is the worst behind us? I'm not sure. But seasonally, as you get into the last half of May and certainly June, July, you see much better demand, much better cash hog prices, almost year in, year out. And, I think that can be something that helps build on these gains slowly. So I still think we've got better markets to come on the hog side. Cattle, I'm not so sure. We're going to have a choppy ride there. We may have a little upside in cattle the next couple of weeks, but boy, producers better have their finger on the trigger, ready to take advantage of any further strength the next couple of weeks in the cattle market. So, it's definitely shaping up to be a volatile summer of trade. It already has been much more volatile than we've seen, when you talk about cattle, hogs, corn, beans, wheat. It's been much more volatile here recently than what we've been used to, and I think that's going to, kind of translate out into summer and keep some really choppy, volatile trade going on.
Right on. Okay. Well, if guys want to get a hold of you, Chip, and continue this conversation, how would they do that?
Yeah, the best way is just call us right here at our office, 309-550-7213. We'd love to chat with you.
Great on. And Moving Iron Podcast can be found on iTunes, Google Play, Stitcher Radio, TuneIn Radio, and SoundCloud. And check out our YouTube channel where you can see Chip's daily after the bell. And you can also see Glenn Birnbaum's tax move of the week. So till tomorrow, we'll talk to you later.
All right. Have a good evening.
All right. Thanks, Chip.